What's up guys, welcome back to the channel. This is Steve and today we're gonna go really deep into a city, state, and I'm gonna even find you a listing that's active on the market which you can make an offer on, but I'm doing it for the purpose of showing you how you could finance this property, what kind of programs are available, and I'm gonna even show you the most popular program that I'm seeing my clients use today. Keep watching. All right, so today we're going all the way across the other side of the country to Florida. Florida is a state that I've started working with in the last year. It's crazy to think that the year is almost over, but we've helped numerous clients this year purchase a property there. Some of them are Californians that are moving, some of them are moving from different states. But today I decided to look deeper into a part of Florida that's located near Orlando. Orlando is northern Florida, one of the 3 or 4 biggest cities there, has an airport. Disney World is located there. I know we on the West Coast, we know we're very used to Disneyland. Some of us have been there multiple times. However, Orlando, it's 20-30 miles away from Disney World. Now, the place that we're going to look into today, it's a neighborhood or small little town called Winter Park, which is located 5 miles or 10 minutes away from Orlando. Now, the median sales prices in Winter Park is $595,000, which is an increase 22% from the previous year. Yeah, that's crazy to say that. But the prices in 1 year increased by 22%. Probably one of the biggest that we've seen so far on this channel. By the way, all of these cities, states, recommendations I get from viewers like you. So if there's one that interests you, please don't hesitate, drop a comment, let me know what you like about the video, what you don't like. Maybe you live there already or plan to live there, please add some commentary as well. And like always, if you have other parts of the country that you want us to go deep in, leave a comment below and I'll make sure to get to it. Now, in the United States, the median sales price today is $412,000, which is an increase of 2% from the previous year. Now, a little bit about Winter Park. Homes are selling in the first 19 days, and the average home is getting 5 offers. There's only 38% of homes that are experiencing price drops, and the average home in this city is selling for 3% below the list price. Now, for all statistics used on this channel and for these videos, I use Redfin. Redfin is one of my favorite real estate apps. Not only you could look at different places, see what's for rent, what's available to buy, but it also gives you really cool statistics. And one of them, it gives you a rating how hot the market is. So Redfin is giving us a 65 out of 100 for Winter Park. And just for sake of comparison, nearby Orlando, which is one of the biggest cities in the state, has a rating of 66, which is also homes are selling in the first 19 days. Now, one of my favorite statistics that Redfin gives us, and I use for these videos for you guys, is show the trends. Trends meaning that what kind of online searches are happening using this city. So one of the searches could be people that are already living in Winter Park and are looking to move out or explore in other places, sell their home, move somewhere else. And then the other one is where people are searching to move into this city. Like I did when I did this video for you guys. I went to Redfin, I looked it up, I read everything, and I'm located in the San Francisco Bay Area. So there's people all over the country that are doing the same thing, and Redfin is tracking this. So only 34% that already live in the area are thinking to move out, while 66% of people that don't live in the area are searching this place as a potential home to move into. One of the top searches is New York City, followed by Miami and Washington, D.C. What about schools? So schools here are not the best. I mean, you're gonna find some 6, 7s, it's definitely above average, but you're not gonna see any 8, 9s, and 10s here whatsoever. So that's might be something to consider. Probably gonna have to go for a private school if you want, like, you know, higher ratings and better education. What kind of natural hazard risks? So we'll start with the extreme ones. Obviously wind. I mean, you're in Central Florida, oceans and bodies of water on both sides. So obviously, like, the chance of wind is gonna be very high. But you could say that for most of Florida. And also heat. You could experience 8 days per year where the temperature is going to be above 107 degrees. As far as the low hazards, so fire, obviously, Florida's not really known for fires, so it's very low. And then flood as well. Since you're in the center of the state, bodies of water are far, your chance of flood is also very minimal. So I got something special for you guys. Let's take a look at a listing. Let me turn on my screen. So yeah, it's listed for $675,000. And right away, I mean, curb appeal is really cool. That tree is awesome. Like, wow, it's got like 1, 2, 3, wow, it's got like over 10 different branches. So that's awesome. Single story too. I know from experience living in Bay Area, single story homes are a little bit more demand and they tend to be a little bit more expensive. So far, yeah, the yard looks really clean. Wow, the inside, wow, look at that. Look how much glass. It's pretty much floor to ceiling on one side, all glass. And that's really cool. Although it kind of wonders how that goes with the extreme wind factor for the city. But regardless, it looks really cool. The house is already super clean and light, but then just the amount of windows and natural light just, yeah, it's definitely, you know, pictures are done really well, and this seems like a house that people would want to live in. Yeah, well, yeah, so this is kind of typical for these single story homes. The living room is always like kind of arched, so it's you get a high ceiling there, which is cool. I mean, that's the room that you spend most of your time in, so it makes sense for it to be a little bit higher ceiling and a little more open. Okay, well, the rooms look really clean. Take a look in a second when the house is built, but all in all, backyard is clean. You get a basketball hoop that's built in. Very spacious, awesome yard for the kids. Like, wow, not even just for the basketball, but just because how like it's so flat and clean. Okay, so it's a 3-bedroom, 2-bathroom, 2,019 square feet, single family home, no HOA. It's been listed for 20 days. So remember in the beginning we were talking about that in this city you could expect to pay 3% less. So this is definitely a candidate that, you know, you would go all in, try to like get seller concessions, price reduction, like whatever you could get. Maybe tickets to Disney World for the first year. This is definitely a market and house that you could negotiate with. Built in 1959, renovated in 1979. It does look renovated, and it's probably been updated even more after that. They're just officially on the records, it says 79, but looks like for sure they renovated it. Let me take a look at numbers and then we'll kind of dig into it. So it's listed for $675. It's been on the market for 20 days. And remember in the beginning of the video, 3% is what homes are selling for below what they're listed. So in this case, it's $20,000 and some change, so $20,250. But let's just, for sake of this video, let's just use $20,000. So we'll be able to show you a couple different options. 5% down payment for you guys that are new to this channel. I use this a lot because as a first-time buyer, it's a really cool program. If you have a good credit score, 700 and more, 5% down conventional loan. It's a really cool program and I use it a lot over the last 9 years for all of my clients. So in this example, let's take a look. So if you bought it with 5% down payment, you have a credit score of 720 or higher. 700 works too, so it's not a big deal, but for the sake of pricing and numbers, I'm using a 720 FICO score. The interest rate today is 7.5%, and 5% down out of the $675 purchase price is $33,750. So that's your down payment. Now, monthly payment, when you calculate everything, tax, insurance, HOA, Florida's a little bit higher on the property insurance, so I already incorporated that. So altogether, you have $5,356. Now, just gonna throw it out there, a lot of people question, so how much income do you need to qualify for this loan? $130,000 per year gross income, and you could get this loan using this 5% down payment. Now, let's talk about what you could do with the seller concession. Remember earlier we talked about 3%, which is $20,000 and some change, but for this example, let's just use $20,000. We could go 2 routes. One route, actually we could go 3 routes, but for this video I'm gonna go deep into 2 of them. But let's, so route number 1, you could just ask for a $20,000 price reduction and just try to get into the deal. Your monthly payment is gonna be a little bit lower, but it's not gonna be like game changing. Now the following options, option 2, you could take this $20,000 and pay for the closing costs. Now, $33,750 is your down payment. However, this county, this city is a little bit on the higher end in transfer taxes. Transfer taxes is one-time taxes that the county charges for any new owner that's buying real estate in that city or county. Sometimes there's city transfer tax, county transfer tax. Sometimes you have both. Depends on the area. Sometimes it's seller paid, sometimes it's buyer paid, sometimes it's split. But in this particular example, this city, this county, it's weighted heavily on the buyer. So your closing costs, your one-time fees to buy real estate here are going to be higher than other parts of the country and other parts of Florida. So in this case, you have about $20,000 in closing costs. So your $33,000 down payment plus $20,000 in closing costs, you could close this deal with $53,000. Now, option one. We submit the offer at the list price and ask for this $20,000 credit to cover your closing costs. You walk away with the same payment as we just discussed, which is $5,356. And your cash to close is not $53,000, but it's gonna be $33,000. Really cool. I mean, for some people, $20,000 like left in your pocket is a huge deal. Now, option three is gaining a lot of momentum and it's very popular. It's called a 2-1 buy down. So basically this is an interest rate buy down. So we talked about the interest rate being 7.5. Now the first year is gonna be 5.5. Second year is gonna be 6.5. Year 3 through 30 for the rest of the loan is gonna go back to 7.5 and it's never gonna be higher. It's not a risky loan. The interest rate gets fixed from the beginning. You just have a first 2 years where it's a little bit decreased. And this has to be seller paid. So the amount to decrease the interest rate to 5.5 the first year and 6.5 the second year also has a cost. So it has $15,000 in cost to do this, which the seller has to pay. So follow me on this. So we have a $20,000 seller credit. We have $15,000 that's gonna be prepaid for your mortgage for the first 2 years. And you have $5,000 left. So $5,000 is going to go towards the closing costs because it's not just going to go into air, it's going to lower your $53,000. In return, what do we have? We have your total cash to close is going to be $48,000. We're going to have a 2-1 buy down where your interest rate the first year is going to be 5.5. The payment is going to be $4,444. Now year 2, your interest rate is going to be 6.5 and the payment is going to be $4,856. Guys, now I really want to hear your opinion, your commentary. What would you prefer between these three options? Remember, option one, we didn't really go deep into it, but basically it's just going to be a price reduction and your monthly payments is not going to change that much. Option two is we lower your cash to close by $20K. You buy this house with only $33,000 and your payment is going to be $53.56 for the first year. Option three is we use the buy down, 2-1 buy down. You could close with $48,000 and your first year payment is going to be $44.44 and second year $48.56. Now, drop a comment below. Let me know which option you guys would decide. Thanks so much for watching. I enjoy making these for you. So please leave a comment below. Let me know what you think. If there's other parts of the country you want me to go deep on, please don't hesitate. And I'll see you guys on the next video.